Hello, everybody, and welcome to this session, this OMFIF Sovereign Debt Institute session on the outlook for European sovereign borrowing in 2022. We have a really good lineup of speakers for you today. We're going to hear from Gert-Jan Koopman, who is the Director General of DG Budget at the European Commission. Then we have a couple of panels with some senior officials at many of Europe's leading borrowers, sovereign and supranational borrowers, and as always, at an OMFIF SDI session. We'll hear from the investor viewpoint as well on each panel. That's very important and always part of the program that we put together. Using the term outlook is dangerous these days. We've come to expect the unexpected in financial markets. It's certainly been interesting to note over the last couple of years the way that European sovereigns have, of course, helped Europe's economies through the COVID crisis, obviously at the cost of higher debt and bloated central balance sheets, but they have performed miracles at times to support the needs of their economies. Whether that will change in 2022, we will see, and we'll certainly talk about that during the course of today. As usual, I think 2022 has got off to a fast start in the European sovereign markets, lots of deals coming out. Interesting to see a number of deals at the longer end of the curve. That might be counterintuitive, given that we expect inflationary pressures over the course of the rest of the year. Is that borrowers jumping in through the window while it's still open? Or is it actually a sign that maybe borrowers don't think the rates and investors don't think the rates are going to rise that high, even if inflation remains a little bit more persistent or goes higher than some people think? These are all some of the issues that no doubt we'll talk about today. We'll also talk, of course, about some longer term trends in the market. We have seen, of course, Europe becoming and sovereign Europe in particular becoming the center of the green bond markets. Massive change, of course, this year or last year with the advent of Next Gen EU and its commitment to green bonds. We'll talk a little bit about supply and demand there and the way in which maybe that excess supply might lead to a reduction in the greenium that we've seen in a lot of the issues. We'll look further ahead as well. We are almost certain, I think, to see more test and pilot programs in terms of issuance on the blockchain or through new digital technologies. Again, Europe's issuers are leading the way on this. There's no doubt that others are following, and everyone's looking very closely at what they're doing. Investors, I know too, have thoughts on this, and we'll hear about that as well. We've got a pretty full schedule lined up, so I won't talk for much longer now. In a moment, we will go over to David Marsh, who's interviewing Gert-Jan Koopman. But just to kick off, I wanted to introduce, for some opening remarks, our great friend Frank Scheidig, who is the Global Head of Senior Executive Banking at DZ Bank, to talk about some of the issues that borrowers and investors are going to face in Europe over the course of the next 12 months. Frank, let's kick off by just me asking you, what's the outlook for sovereign borrowers and investors this year? What are the challenges that you think they're going to face? And without asking you to look into your crystal ball, what should we look out for over the next 12 months?
Yes, Clive, thanks very much. And I wish us all a good luck today on today's conferences. I'm looking forward myself, listen to what David in the hot seat, let me call it like that, with Gert-Jan Koopman will contribute. I'm pretty sure that is a nice follow-on session after my little moments here. And later on, we have two great panels. Can't wait to listen to them either. But yeah, let's go forward to the outlook. What could we expect? Borrowing will definitely, and that is my personal idea on that and thoughts, that 2022 will be a much more difficult year. It is not such a one-way in the trend for interest rates, what we have faced the years before, more or less. We see the highest inflation rates since decades. Lately, the 7% we have saw in America, highest rate, if I remember correctly, since '82. And that is 40 years ago. Don't forget that. And we're facing similar situations here in the European time zone. That means the good thing is for the financial sector industry, if I talk for the banks, the curves will be not having the flatliners anymore from short to long. We will see a steepening in the curves, but also we will see much more volatility. So that means timing would be very important for the issuers, particularly those who have to bring in a certain kind of volume per issue, like we will hear it in a couple of minutes from Gert-Jan, what the EU has to face. And in particular, if you're an issuer who has to raise longer maturities, and even if it is belong 10 years and probably also toward 30 years, you have to have a good feeling for the timing, and you have to also have a good commitment from the investor base. Yes, that brings me also to my commitment, not my personal one, also from the bank and also from the industry, what the banks have to give these issuers as a lead manager of their issues. Yeah? Because it will be more important, as in the past years, that they select the right ones to bring in and stabilize the secondary market trading. And of course, it is always good to have fast money accounts in. It was so in the last years where, and most of the issues, 50% were bought by the ECB, if it was an allowed issuer to invest into. But market liquidity has to come back and will come back automatically, because you will not see anymore these domination for the rest of these mentioned 50% buy and hold investors anymore. Yeah? So also they will be a little bit more cautious, in particular on the long end, where we can expect way more volatility and higher interest rates as it will be on the short end. Yeah, instrument-wise, I think we will pretty much stay the same. I think Europe itself is, because of the existence, I wouldn't call them new kid at the block, because they were very well known for decades before with the EU, but the dominance they had because of the SURE program, the 100 billion as a social bond issuer, SSA social bond issuer, made them to the largest in the world. Same will come over time now on the green bond side. I think the other, and that's my personal view on that, the other SSAs in Europe, I think will profit from that, because we will see as a whole Europe's sovereigns and SSA issuers way better liquidity as before. And that makes for the large investors who have been in Asia mainly, if we carve out the pension fund investors and the insurance industry from Europe and Americas, in Europe I talk about including the UK, I don't talk in borders here. I think we hopefully can expect more activities and investments as well from the Asian Pacific realm. That's what I predict that will come, but we have to make a professional investor relationship. What is, I think, I'm pretty sure our European SSAs and global SSAs are well in shape and know how to do it. What I also foresee is a way larger proportion of sustainable or bonds with a sustainable background, whether they are green, SDG bonds, or even social bonds. I'm pretty sure we will see here a way larger volume, probably a rise between 30 and 50% in what we have seen last year. And I do hope that we find lots of agreements on the quality that we can attract the international investor base going into such kind of theme bonds and quality bonds from the wider range of SSAs issuers. Ladies and gentlemen, let me hand over now to Gert-Jan Koopman and David Marsh. As I said in the beginning, I'm pretty sure we will have an interesting hot seat discussion here. That's my own interpretation. And but I'm looking forward to hear to what Gert-Jan has to say. Gert-Jan, I think the floor is yours, and David, all the best for your upcoming hot seat discussion.
Good. Well, thank you very much, Frank and Clive, for kicking off. And I'm David Marsh. I'm the chairman of OMFIF. I'm very pleased to be presiding over this talk with Gert-Jan. who is in Brussels. So Gert-Jan, I'm not sure whether I can see you at the moment, but I'm pretty sure you are there. Do we have Gert-Jan in the studio in Brussels?
Can you hear me, David?
Yes, I can. Yeah, I can hear you and see you. So thanks for being with us. As Frank and Clive were saying, we are looking forward now to a year 2022 when there's going to be a few thrills and spills along the way of the sovereign borrowing landscape. Just yesterday, we had this landmark day when the yields on the 10-year German bond went into positive territory for the first time for about 3 years. You might say that's a sign of normality. Could I just kick off by asking you, how do you see the supply-demand landscape for European sovereign borrowers in 2022? On the one hand, the sovereigns will be borrowing a bit less than in 2020 and 2021, because we assume the economic recovery will pick up steam, or at least proceed at a relatively steady pace after the spills and the fluctuations of the last 2 years. On the other hand, the ECB is going to be reducing quite significantly its purchases of government bonds, and we do have the spectre of higher interest rates, certainly in the United States. So how is that going to affect the supply-demand balance, do you think? And how will that affect the EU's own very large and important borrowing program?
Thank you, David, and good morning to all of you. Very, very happy to join you this morning. To your question, you use the word normalization, and I think indeed that is the way I see it, but obviously the path towards normalization is not a straight line. It will be a bit bumpy, and that's, I think, what we're experiencing. In terms of the interplay between net issuances by member states and the ECB's purchase programs, clearly what we will see is a reduction in net issuances by member states. Again, I think a sign of normalization as the economy picks up steam. The phasing out of and stopping of the PEP will not be fully compensated by the borrowing under the asset purchase program. So I think on balance, what we would see is probably a balance between these two factors that would reduce somewhat the overall supply of bonds to the non-ECB buyers. We in our space look at this quite comfortably. We believe that if necessary, the ECB could purchase more of our bonds as part of their program. In fact, given the very significant demand for our bonds, we would not necessarily see that as important to support our issues. So all in all, I think that we look at the coming months with confidence, even if we are, of course, acutely aware that it will be a bit bumpy and that we will probably all be confronted, all of us issuing bonds with some turbulence at different points in time in the next months or so. Thank you.
It's a good point that you make, because for the individual government borrowing programs, there's the issue and the issuer limit that the ECB has of 33%. For the supranationals and for the EU itself, the limit is 50%. So are you saying that the ECB could, in certain circumstances, act as a kind of backstop? Or I'm not wanting to say that they are underwriting the bonds, but that should give the investors maybe some comfort that the ECB is there as a backstop. Would you use the word backstop?
Well, I don't think we need to assess the ECB's position in the market as such, as a backstop. But I think it is true that the ECB has a room in its allocation to reallocate a little bit from past purchases from other supras to us, despite their envelope coming down a little bit. And therefore, I would not be surprised if they did so. But as I said before, our issuances have typically been oversubscribed by a factor of 10. So I'm not actually terribly concerned about the need for a backstop. I don't think we will need it. But it is obviously nice to know that the ECB is out there and that they have space in their allocation.
Well, that's right. It's a comforting presence, you might say. In terms of the interaction with the other sovereign borrowers, you've got two issues here, really. Over the years, people have been saying there's a lack of European safe assets and investors are clamoring for them. And now we've got the massive European Commission program, which will go on for a number of years. So you could say that's good because that's now giving investors what they want in terms of the European safe assets. On the other hand, it could be a crowded space because you've got the other agencies. You've got the EIB, which is very well known in the market, has been there for a number of years, and you've got other AAA or AA borrowers as well. Do you think there could be a question of competition, particularly given the fact that the ECB is going to be overall less in the market for investing than in the last couple of years? So what is your balance of competition with your peers, shall we say, in Europe? Are the French going to get squeezed, for example, because there'll be the Germans still issuing quite a lot, and yourself now into what could become a relatively crowded market space?
Yes, well, I would say that the debate about crowding out versus crowding in, if you will, is an interesting one. So far, we would lean towards the thesis that there's been more crowding in than crowding out. And I also think there's a macro phenomenon that we will see kicking in this year, which is essentially that the relative pricing of different asset classes is changing as the curve drifts upwards. So actually, you might see a number of investors tilting a little bit more towards bonds away from other asset classes, simply because the relative remuneration is improving, which should support all of us in the issuance space. So I think the fact that we're out there, that this is attracting interest in European capital markets more generally, the fact that we coordinate very closely, obviously, in operational terms with other issuers to avoid clashes of schedules and the like, and the fact that there is interest more generally globally for euro-denominated assets, which is something NGU, our program, is generating. I think all of that should be a very comforting outlook for this year. So I don't expect that the French you were referring to, OAT, is coming under pressure. I don't actually think that is going to happen this year.
You referred to coordination with other borrowers, and of course the ECB is also there in the marketplace as well. If we were talking about this in the case of the Treasury and the Fed in the United States, there would be a pretty strong coordination between the Fed and the Treasury in terms of issuance and investment. In Europe, it's a bit more complicated because we've got sovereign borrowers from many countries, not just from one polity. Is there now, as part of your developing DMO development, is there a formal or informal coordination with all these different issuers and also with the ECB? Because you referred to the fact that you've got to have coordination, say, with the EIB. How far does this coordination go in terms of just managing the landscape and making sure that there won't be any traffic accidents or any collisions in terms of issuance on the one hand and investment on the other hand?
Absolutely. Well, and the first point to note is that we're not the US, so the sort of analogy with the Treasury and the Fed, that doesn't really apply to Europe for all the reasons you mentioned. That being said, in terms of the logistics and the avoidance of traffic accidents, we are very, very active, and actually that is something that is discussed at quite some length between my team, Niall Bowen, Siegfried Ruhl, and the teams in Luxembourg, and all the issuers. We know when people go to market; they know when we go to market. I mean, there should be no surprises here. Beyond that, there is the ESDM. This is a sub-body of the Economic and Financial Committee, the EFC, where I think there is, how shall I say, the nucleus or the first green shoots of coordination that goes a little bit further. We've had extensive discussions, for example, last year when we had to exclude temporarily a number of banks for reasons of transgressions with regards to cartel decisions. There was a debate about that. I think it was the first time that DMOs across Europe were actually discussing these issues. There's been a whole debate, obviously, about green bonds. We have the world's biggest green bond framework. Many member states have green bonds, so there's discussion in the ESDM about these issues. So I think what is gradually emerging here is a substantive coordination, even if it is still very tentative in the context of what is a council sub body. So I see that as very positive. ECB is represented there as well, as you know.
Yeah, well, that's very interesting. I do remember that case of one or two banks being excluded, as you say, because of transgressions in the past. Have they now been given a polite rap over the knuckles and been invited back into the fold? Is that all the past now?
They're all back at the table, and they have all clarified that the remedial actions that they have put in place are sufficiently robust for us to have confidence that this will not occur again in the future.
Good. Well, that's a nice way of saying that the headmaster has spoken here and the pupils have agreed to behave themselves in
David,
the future.
that's not really the relationship we have with our banks. We see that sort of rather differently. They've been extremely supportive, but where there are problems, as a regulator in this space, we obviously had to comply with our own law.
Good. Yeah, sometimes you have to take out the cane, or at least show the cane, maybe. In terms of the DMO-like structure that we are now seeing in Europe, as you say, it's early days, yes, and it cannot be compared with the United States. I've spoken about this with various people in the German government, because as you know, the Germans are very keen on this program being just temporary for the time being. But they say, well, if we did decide that we ever wanted the massive EU borrowing to become permanent, then we'd probably think of this as a very good rehearsal, a very good test run. How far along the curve do you think we are developing now in terms of having a proper DMO-like structure for the European Commission? You've got a number of people there. You mentioned one or two names who were there on temporary secondment. Has that now attained a degree of permanence? And also, Frank mentioned earlier about Asia Pacific. To what extent do you think the presence of the EU in international capital markets is now being acknowledged as a fact and as a permanent fact by the very important investor community in Asia Pacific?
Yes, no, two very good questions. I think we've set this up in a way that it could actually become permanent. I mean, that's why we're essentially emulating our peers. We're rolling out a diversified funding strategy. I've told the teams that a good structure is not good enough. We have to aim for something that is really up there with the best for a variety of reasons. So that's what we're trying to build. And as you said, member states, but also other international institutions in Europe. I see EILA there, the IB, but also the ESM have been very generous in supporting people. So I think the structures are now in place. There's still a little bit of developmental work to be done this year. We have gradually rolled out the diversified funding strategy. I mean, our bills we only started issuing bills a few months ago. So, this is being building a car and driving it at the same time. It's nearly there. There's a few accessories that still need to be added. In terms of staff, we have the complement of staff. It's true that a number of colleagues were sent on secondment, and obviously we're making arrangements to ensure that we have a good mix of permanent staff and team members that who can rotate over time. I think that's actually very good to always have the best and the brightest in the team. So we're setting this up for the long haul, also because we're going to be in the market until 2058. So yes, net issuance is going to stop according to the present legal conditions by 2026. But obviously we're going to be there for a while, and we want to have a structure that that demonstrates credibility, that it can credibly deliver this type of operations at a European level and at scale. So if that needs to be made permanent at some point, or if there's a successor to this program, then the tool is there and the capacity is there. How does Asia Pacific see this? Well, I think it's still early days. We haven't been able to do a lot of outreach. We do that as anyone else virtually, which is not ideal. Of course, they know us from the days we were issuing a few billion euros here and there, but now we're a different kettle of fish. What I hear from those I speak to is that they are beginning to see us very differently, because in essence for them, the fact that there is a common debt and that this debt is going to be there for decades to come, it changes qualitatively the nature of our bonds. So, and it also qualitatively changes the way they look at the euro. I mean, some of these issuers, some of these investors have told me that they now see the euro very differently. They say, well, this shows it's going to be here to stay, and I think that bodes well. We really want to go and have much more in-depth discussions with them. At present, their role in our investment landscape is still, I think, below where it could be, and I would expect this year to see a bigger share going there. They are very interested, and there's a lot of explanation that we need to do. Our arrangements, our institutional setup is a little bit complicated if you live in that part of the world, and therefore I think as we explain more, this perspective on Europe, this perspective on this program is only likely to improve further. Thank you.
I've always noticed a huge amount of interest in and curiosity about the EU from that part of the world. If you had to say, out of those three broad areas, Northern Asia with Japan, China as a huge investor, and then the area you might call ASEAN or Singapore, of those three very broad areas, where do you think you need to do the most work to really make sure that you're properly introduced as an institutional body, which, as you say, is going to be present in the market for decades?
Well, I think for David, for a variety of reasons, ASEAN is, of course, quite a diversified set of countries. So there we do need to do a little bit more by way of explanation. With Japan is much more concentrated. So we've had a few contacts with key Japanese players. The Chinese are very interested in what we have to offer for obvious reasons. I think, generally speaking, for all three entities, we are offering a possibility to diversify, and I think that is very important for them. Diversify in a way that is safe and that is attractive, because it's also very liquid. Now, I think the issue for them is price, and that's something which, paradoxically, the current changes in the pricing landscape may actually help address, at least to some extent.
Well, we were talking about normalization earlier on. If you were to look at this on a net basis, the fact that we are going to see yields rising this year, that might cause some perturbation in some of the programs. It may cause some issues like spreads widening in Europe. But would you say, on the whole, this is good news, because you are going to be offering the investors some proper yield, rather than them paying you for the privilege of investing in the bonds? Would you put it that way?
Absolutely. Listen, I was in the Emirates with my commissioner last week, and I can tell you, we had a pretty difficult time explaining why they should be purchasing negatively yielding assets denominated in euro. So this is going to help us, I think. But more importantly, David, I see, I take a slightly more comprehensive view of what we're doing with NGU. We're talking about the funding side, but the funding side is there to serve the objective of actually generating a strong recovery and making it resilient. And having a 10-year bond yields that at least yield something is part of that journey. So I see it also as positive from that perspective.
Yes, and there are, as you know, as an audience here, so if anybody from the audience does want to put in a quick question through the chat function, please do that. We've got about another 10 minutes to go here. On the macroeconomic side, I know you are not Christine Lagarde, but on the other hand, what is your own crystal ball feeling about inflation, and whether there will be a concomitant rise in the ECB's interest rates this year? I know that's not the established point of view at the moment from the ECB. The ECB saying they're going to keep interest rates where they are at negative levels, the official rates, for the next months until the end of the year. But what is your own feeling about interest rates in the European area, given the fact we are going to see quite a number of interest rate increases in the Fed?
Yes, well, as you say, institutionally, it's not our role to comment on policy rates. What I can say is that anyone who looks out of the window sees what the market rates are doing and what the rates in the US are doing. Capital markets are integrated. There is clearly spillover between the US and Europe, and the inflation figures speak for themselves. So, we're prepared for a world where nominal rates are going to be quite a bit higher, and it's for the ECB to decide how to respond with the policy rates, typically there is a correlation between the two, but I will leave that to our colleagues from the ECB.
This point about diversification is very, very important, because I do remember talking to investors over the years, and sometimes they look at it rather similarly to when the Airbus was being set up as a competitor to Boeing. And investors, particularly in China, which you highlighted just now, do say, well, we do need an alternative to the dollar. We can't just buy Boeing. We'd like the Airbus as well, if you're in the airline business. Do you think that from a structural point of view, when we look back at all this in, say, 20 years' time, this will be a seminal moment in terms of enshrining the euro as a proper world currency? We all know there's the institutional and structural issues of the euro area, some of which still need to be resolved. But do you think historians will look back at this as a landmark?
Yes, David, I think that is absolutely true. And we've been working on the international role of the euro for a very long time indeed. I tend to tell my colleagues that what we're doing here is probably much more important than many of the wonderful policy communications that we have been adopting over the past 20 years.
I'm sure they're very pleased when you tell them that.
Well, I think there's generalized enthusiasm across the Commission when it comes to this program, because the good thing about this is that it's empirical, it's measurable, it's concrete. At the end of the day, we're going to be held to account not just by our peers but also by the markets. All of this is going to be measurable, and I think what we've been discussing and what you've just said about how this will enshrine the role of the euro in international capital markets. I mean, this will come out of this program in a way that is demonstrable. It's not just an assertion which we like to make in policy-making circles. It is something that we will have to prove in the real world, and I think that's very salutary.
And of course, it's an old adage, going back to Jean Monnet, that Europe proceeds by crises. We've actually had several crises in the European Union. The COVID has obviously kicked off this massive solidarity that we've had. We've also had Britain, which is a country I happen to come from, leaving the EU, which obviously I'm upset about. I do also have a German passport these days, so I have a foot in both camps. But would you say that if Britain had still been a member of the European Union, it would have been far more difficult to get this programme off the ground, the Next Generation Fund? So would you go as far as to say that? It's
difficult to speculate. It's true that the UK was not amongst those member states in the Great Recession pleading for a Europe-wide approach. I think it's reasonable to assume that it would have been more difficult. Now, I think the pandemic was qualitatively so different that also Germany took a rather different stance, and who knows what the UK would have done had the UK remained. But we managed to put this together in a few weeks. I think it's been unprecedented in terms of speed and resolve. I can only speculate as to what would have happened had the UK been a member. That being said, having worked for a British commissioner for 10 years.
You worked for Neil Kinnock, didn't you? Yes, that's right.
Where we are today, yeah. Thank you.
Neil Kinnock, his son, of course, still very prominent in the House of Parliament, asking questions to Boris Johnson yesterday. So his son is keeping up the good work. In the remaining minutes, I want to ask you a little bit about green bonds, but just one question about Germany and about what you might call the teething troubles, or as the development of the DMO program gets underway. There are still, of course, court cases in Germany, as there always are. The Constitutional Court has been asked to look into the legality of the program. And as you know, these cases tend to go on for years. Is that something that comes up with the investors, particularly in places like Japan, where they're very legally minded? Do people ask you about this and say, well, look, can you just please tell me, Mr. Koopman, is this a legal program?
Yeah. No, interestingly, it has not come up. I think people have noticed that two things. First, that this program was actually approved not just by the Bundestag, so the the lower chambers of parliament, but also by the Bundesrat, so their Senate, with very, very large majorities. So this wasn't just the German government; it was actually also the German parliament. And I think people are not terribly impressed with the interminable court actions, litigations by minority stakeholders in the community. There have been a few cases that have been lost typically. German government has also come out very strongly, maybe an important point to note about the primacy of EU law recently, in a letter which Mrs. Merkel sent just before stepping down, which is actually something everyone should read. It's a very powerful statement as to how the German government sees the relationship between EU law and national law. So I think all of that gives investors a lot of reassurance.
Yeah, well, that's a very good point. Now, on the green program, we've got this 250 billion of issuance planned up until 2026. The EU will be the biggest green issuer. To begin with, we've seen a huge demand for these issues, such that the yield that you offer is not all that attractive to the investors. Is this just a flash in the pan? Is just this the beginning of a process? Would you expect there to be a more normal spread between the conventional bonds and the green bonds, or will there continue to be this excess of appetite for the green bonds, given that it's going to make up 30% of your issuance? Could there almost be an oversupply of green bonds, which will be excessive to the large appetite that we know the investors are showing?
Yeah, it's a good question. Actually, what we have seen is that the greenium, so this discount in the price, has only increased in secondary markets quite significantly. And it is true, of course, we will be putting a lot of green bonds in the market, but equally the demand for it is absolutely massive and is growing very strongly. So what the balance will be exactly between these two trends, I don't know. My own expectation is that the shift towards ESG is so strong in the investment community that the pricing, the relative pricing, is not going to change a lot compared to where we are today. But I might be pretty wrong on this. In fact, I wanted to underline that we're not here doing this green bond program to reap a few basis points. That's not the objective. It's a nice to have, but actually we see this as a part of a diversification strategy, part of our responsibility as the world's biggest regulator in this space, and therefore we want to also to have consistency on the funding side in this respect. So if the greening were to reduce over time, that would not really bother us, I must say.
No, and it is actually slightly counterintuitive. It's not what people would have expected 5 years ago to see that gap. We are coming to the end, but actually I've got a question from the audience, which is exactly what I wanted to ask myself. Frank Scheidig mentioned before about the emphasis being put on social issues as a whole. In terms of issuance, we've already seen some of that in some of the SURF issuance that Europe has done. Do you think that the new DMO structure that we're seeing will become more active or interventionist in terms of addressing rising global human and social problems? That's a question from the audience, but a good broad question with which to end. Gert-Jan, what is your answer to that?
Well, I would say horses for courses. I don't really see our role here in DG Budget and my DMO team as taking the lead in addressing rising global human and social problems. As important as they are, I think we can contribute where necessary through the way we implement our policies and the ESG frameworks we have. Sure, and Green Bond NGU are good examples, but clearly I think we need to do our job. We need to build our credibility. We need to focus on excellent execution and implementation. First things first, I would say.
Good. Well, I think that's the right way of putting it, and also one has to cross a few other bridges before one gets to the final land, I would say. That might be another way of putting it. We could have gone on for much longer, Gert-Jan, but we're going to end now because I'm going to hand over to my colleague Lewis to go through with the rest of the program. But thank you very much indeed for talking us through this early stage development of what we might call a DMO-like structure. It's not a fully fledged DMO yet, but it's starting to look like one. It's still work in progress. There's the investor relations to be done with other parts of the world where you've not been able to get to physically up to now. I'm sure there'll be more of that in the United States, of course, as well as in Asia. So we're looking forward to seeing how that develops in coming years, and looking forward to seeing how the yield structures and the yield curve develops in what should be a busy and exciting and potentially somewhat turbulent 12 months ahead. So I'd like to thank you very much indeed, Gert-Jan Koopman, the Director General of the Budget at the European Commission, who's in charge of this enormous program, land-breaking program. Thank you very much. Good luck to you and all your colleagues, and we look forward to keeping in touch with you as the year goes on.
Thank you very much for having me. It was a real pleasure, and looking forward to continuing our conversation. Take care and have an interesting
Thank
conference.
you. All the best, and see you soon, I hope. And I'm going to hand back now to Lewis to take us through the rest of the program. Lewis, over to you.